Hello, everyone. And today we're starting kind of new format, which is called Planted Wrong. We're going to discuss the cases which failed because it's quite nice to know the things which are working, but you never can guess why it's working. You can do assumptions, but definitely you can find out what went wrong and what didn't work. And today we have a really interesting topic about the startup from San Francisco, which is called Tally. And the today's title is How Tally's mission struggled to take the roots. And we're going to discuss this startup, which has been founded in San Francisco 2015 with a really great mission. And I think it will show how good things executed not properly still fails.
Yeah, everybody loves to speak how others fails, and we decided to take this kind of a topics and to develop to show unfortunately unsuccessful business cases because we have to learn from
Mistakes.
mistakes and unfortunately, Tally was founded in 2015.
Yes.
So this year they could have 10 years. Unfortunately, last year they shut down their operations.
Yeah, so they has been active for 9 years on the market. The last day for the platform was in April 2024, which is long run. Like for 9 years, you can pivot a lot, you can review what is happening on the market, and the market is quite active. And I think it's important to highlight that we're talking about the startup, which was raising the money in Silicon Valley. Like everyone is saying that by being a tech startup and especially fintech startup in Silicon Valley, it means that you have almost no bottom cash pockets, that you can raise the funds, you can do whatever you want because you have the best engineers, you have the best market and advisors, best VCs available in the same area. And sometimes it doesn't work, like with the case with the Tally. So can you help me a little bit with the mission of the Tally? What they were aiming for?
Mission was super simple. Unfortunately, Americans they are overdebted with card debts. So usually, people when they have card debt, what they do, or start to pay debt, or they go for refinancing, or they do both. Teleo, their mission was to take all the offers from the market via open banking or wherever via brokerage for refinancing. You enter as a user, register yourself, KB, KC, classical, la la la, and then your system is helping you. At that moment, 2015 was called
Advisory.
robo refinancing tool, not AI. So the goal was to help you to get out from debts
Yeah.
by auto refinancing your debts. So basically, it was kind of an automatic broker that you allowed in your phone or wherever in a
Device.
device and terminal. Yes, we are speaking about 2015, not phone. So you give access to all your funds, to all your wealth management, and it was doing. By the way, it was absolutely great project, great idea. A lot of VC invested in them, big ones. I think one of the biggest was
A16Z,
yes,
which is well known as Andrew Horowitz investment fund. He's like pioneer and well known person in this area because he has strong vision, strong understanding of the market, and usually invest in top notch projects. And this one failed.
yes, and failed. So there are no real public data on the markets about their metrics, but we can make reverse engineering,
Yeah.
calculating from backwards. So seems like they had two issues. One of the problem was huge customer acquisition cost. So the CSE was so huge that it never came back the LTV. So the disclaimer is like this. This is our numbers. We
Yeah.
calculated like this, making reverse engineering. So we took all the money they fundraised it. We took all the customers they had, spread it via all the customers, grosso modo evaluated the product cost, burn rates, la 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 la. And seems like between 2015 2018 they had between 100 and 200 dollars CAC per user.
And let's do the short disclaimer to our listeners. CAC is cost of acquisition. So if you
Yes.
are building the digital product, there is a metric which is called CAC, and usually it's connected how much money you need to put into marketing, into the onboarding process of the person to onboard into your system, and then to provide them monetization. So basically, it's someone who is ready to pay to you for the specific services or for the specific product. And this cost is really important because to make the margin, you need to make sure that your CAC is lower than lifetime value from the customer. So basically, the customer is generating the money for you.
Yes, $100, $200 for a digital product for 2015, even it was quite big number. But okay, at the beginning you think, okay, it's a startup. They need to gather to raise people, to increase the number of users. So okay, it can be acceptable,
Yeah.
and I understand why venture capitalists invested in them. They say, okay, huge CAC, but step by step. Plus, I'm sure they have a referrals fee from being as a
Partners,
broker, yeah,
partners,
partners. So yeah, seems good. Even it was the first red signal, and even from the beginning. The problem is that 2018, 20, 21, something like this, our estimation that it raised up to $500.
which is growing,
Absolutely.
not going down.
No, and it's not like CAC for, I don't know, an iPhone or
Yeah,
a
yeah.
Xiaomi phone even. It's a very huge number.
If you're building in fintech, whether you're launching, scaling, or shipping at speed, you'll want to check out the Fintech Garden newsletter. Every week, we cut through the noise and share real world insights for founders, execs, and product teams. No hype, just practical signals, frameworks, and lessons how the things actually get built and delivered in fast moving markets. Subscribe at the link in the description and start your day with a clarity.
Long story short, they failed because of a huge CAC. We have even worse number for the last years of their existence, but I don't know if $800 can
Yeah,
can be
beat
already scared number.
beat anything.
Yes.
And in this case, it shows, and we discussed this previously and before recording this episode, that in the end of the day, in fintechs, you have two different value streams. One is to build a digital product, but another one is to build a sustainable business model. So financial still rules in fintech world because you can build the most or incredible software and the product, but if it doesn't meet the financial sustainable model, then it's not a product. It's a hobby, it's an art, but still not a business.
Depends. If at the startup stage, yes. Startup stage, you need to provide the
Yeah.
MVP. So
Yeah.
you cannot take care very much about financials, management. I mean, maintaining
At
mode
some level,
at some
because you
level,
need
yes.
to make sure that you are A, convincing VCs, B, that it's going to be grow on the market. Like maybe in this case, neobanks. We know everyone knows that Revolut, Monzo, they have not been profitable in the first years, not even first years, much longer. And although in Monzo, like other funds like Y Combinator, they invested. And the reason for that you understand that with the growth, there is a business models which are available for those companies because they in digital banking, they have the primary or prime customers who will be able to monetize. But with the robo advisor and before even AI, it was not really clear like what type of the customer you are collecting. And that's why it's once again connected to CAC because who you buying to? Like what are your customers? How you can monetize? Do they have a need? What are the needs that overlapping with your services that you have? So I think it's not important as a first goal, but it's still important to have an ability to implement proper business model.
Absolutely. When you already, when you feel that you're passing the stage of startup, you need to take care about
Yeah.
this gross book management or cash flow management or wherever. All the times I saw this in my career, in my experience. We discussed. You also saw this in your side. Without a proper finance management
Yeah.
in fintech specifically, and not only but specifically, it's like being you're a shoemaker without shoes, basically.
Yes, that's true.
You have to build a very very good flow, but unfortunately this startup, this company, which had promising, absolutely promising expectations, they failed due to very very bad financial management. Possibly it was a decision, we don't know. So another disclaimer, we don't have no the full information, the full picture of this, but seems like they possibly they had a decision, was taking an internal decision to do like
Shadow.
this. So it was premeditated, not to harm,
Mm-hmm.
but to develop. I think they were a little bit enthusiastic about Uber, that Uber basically somewhere did like this, but they didn't have such a big
But the Uber
CAC.
is more monopoly. Like if you take a look on the market, it's different kind of game rules. If you're one of the first and kind of monopoly or coming and there is no definitive market with the well-established rules, I would split maybe a little bit different. Like if you're working on commoditized market, which is Uber, like the service of the taxi and getting you from the place A to B is well known for everyone. Everyone
Now,
knows how.
it's now well known.
I would say even before, like I don't know. Remember the movie Taxi Driver?
Okay.
The taxi existed for more than 100 years. Everyone is aware how actually it works. We changed the way how we calling for the taxi, the way how we're paying for the taxi, but the service is commoditized. Like I'm taking myself from the A place A to B without the car. I can share the ride. I can, I don't know, have different options. And with the robo advisor and AI, like what the hell it means? Like is it commoditized? Am I going to have the same experience with the company A, B? If you're shifting, I don't know, you're choosing Lyft over Uber, the biggest change that you will notice may be the colors
Yeah.
because they kind of works the same way. You see the same map, you see the same cars, the same driver might be on two systems simultaneously. So I think it different playbooks or different rules if you're working on commoditized market and you're one of the first to be on the monopoly and another one you are inventing the market and maybe it kind of overlaps with Apple and iPhone because to commoditize the iPhone or digital phone or I don't know, it was the market for navigators before smartphones navigators, but it was not commoditized. And what Apple did, I think, they introduced the way how it's became the standard, and they were the first to introduce the standard.
Yes, yes. Let's talk about how we can do how for those who are building startups or companies, how to minimize CAC and why this is important to minimize customer acquisition cost.
We can take one level up. I would say that CAC is really important, but it depends on your business model, on your acquisition strategy, on your market strategy, or on your strength, or on your competitors. So it's really hard to define. What I think is really important to be well educated about financial models because if we're talking about the business models, they not so many. Like in the world, there is only five business models. They kind of structural, like generic five business models, and then you're taking a look, like renting one of the business model. You can start with the renting the flat, renting the software. Netflix is basically renting the movies, and that's kind of the business model. So you need to be really good with understanding how money works, economics, business models, and then apply to the digital products. Because I see a lot of people thinking that they will come to the market, they will invent or will build the technology, which somehow magically will work as a business model or from the financial standpoint. And I've rarely seen being like that. Yes, sometimes like I really like the Munchkin game, and there is a card which is the card which is in random, like make you to win. So sometimes it happens, not because you planned, not because you were thought through really well, because the consequences and environment in the context help you to succeed in this particular moment. But it rarely happens. And if you want to be a serial entrepreneur and succeed in what you're doing on the daily basis, you need to understand how the things are working. So I would suggest, I don't know, as we talked about the books to read Adam Smith, the Wealth of the Nations, because it's like the most base ground book that you
Yes.
can read about the economics, understanding how money, how labor is working, how innovations may be working. Maybe then to read Peter Drucker, because he is explaining a lot of innovations and how innovations working in financial world management and so on and so forth. So educate yourself about the financial and the business models.
Few months ago, I had a discussion with an entrepreneur who is running a fintech business, and he was telling me that he's struggling with a P&L. So struggling with a P&L, not with managing the P&L.
Yeah.
He's struggling to see a very well formed, very well reported P&L.
Yeah,
And my
that's an issue.
my question was like, what do you mean? I mean, you have a financial manager or CFO or yes, I have. And what's the problem? I mean, just an Excel table.
Mhm.
Till that discussion, I never thought about this. I'll be very honest with you. And he told me like, listen, the problem is not that I not get reports. I get reports. I think as well. But my question is, how? what means a P&L, a very well P&L as a structure
Hmm.
does. For example, we have to include dividends, the paying of a dividends in the P&L or not. Like we usually know, you don't
Yeah,
include this.
because before EBITDA.
Yes, and he's like, yeah, but I'm the. He started to make very We made a logical exercise basically. So he's like, yeah, but if I'm the owner and I'm the single owner and I'm the director also at the same
Yeah,
time of a company, this money goes to me. So I'm deciding if I will take all the dividends or not. So it can affect the P&L of the next month or
yeah,
next period
yeah,
and so
yeah.
on. So, anyways, the discussion. So the main idea I took from the discussion is that he said, like, I observed that the biggest part of PNL, it's eating my PNL, is the CAC.
Mm-hmm.
And I told him, like, what do you, I mean, what is your goal with for your company? And he said, like, yeah, well, right now we want to gather big number of users.
Mm-hmm.
So we understand why we are spending on CAC. They want, so he was telling me that his main goal is to step in a moment from gathering new customers into customer retention. And I mean, classical thing. So you minimize the CAC by increasing the CR, and all the times this works, and you can improve your PNL. So for everyone who starts a company or run a company, pay attention to PNL, because sometimes, and you have to define a PNL inside of your company. You have to define. So you take the classical rules of PNL, of course, open Google or ChatGPT, ask if you don't know, ask
Yeah.
what's a PNL form, but also define internally for your company, for your team, for your future, and for your business model, what that PNL has to include.
It's called financial management,
Yes,
strategical management, and
it's
it's not just about the P&L, it's about the cash flow, it's about the balances to have 360 overview of your business doing, because P&L, it's what should be happening, the cash flow, what has already happened, and the balance is current state with the different assets. So it's really important to have proper financial strategy management, what is in your company and how you're managing that. That's definitely true. And I was thinking about the analogy. So what we're actually talking about cost of acquisition, it's basically the soil where you're planting, because depends how
yes.
fertilized the soil is, what is your cost for acquiring the customer, it depends how your business will grow. So in this case, it's really important to plant your seeds in the fertilized soil where it's possible to actually to grow the plant, rather than in the desert with no rains, with no resources, and then you will fail. Yeah, you will learn. Experience also is precious, but we always love to get the things done and make sure that the results are working.
Yeah, LTV, lifetime value, is
Yeah,
also a very important metric. I think in one of our future cases we will speak also, we'll take an example of bad LTV management.
yeah,
But yeah, this was today was very nice experiment for us,
yeah.
with taking unfortunately bad cases. And
Bad case, but good for educational.
yes, yes. At least I'm sure that every time when we hear bad cases, not bad cases, but unsuccessful cases, it gives us an opportunity to learn others' mistakes. It can be, maybe someone will listen, will see and listen our podcast, and will it will help him, her, not to fail.
Yeah.
So good luck with this. Um, well, we are waiting for your comments to see if this kind of a format is interesting for you. And if yes, we will be sure, we also like it very much, and we will be sure continue this in our next episodes.
Thank you, Dimitro. Thank you for joining and discussing this case. It's really important to learn from someone else's mistake, because
Yes.
the most pricey way to learn is from your own mistakes. Thank you for joining. Subscribe and follow us in social networks.
Bye bye.
Bye.